Hello and welcome to the Breaking Bitcoin Market Update. It's November. Yeah, it's Thursday, November 18th, 2021. Bitcoin seemingly on a bit of a collapse here. I exaggerate a little bit, but yes, we've given up the 60K support. Looks like we're preparing to tumble and explore the 50,000 range. Gonna look for support in the 50s, and the alts. Alts are getting dragged down pretty hard. Bitcoin in its wake, leaves, takes no prisoners. With that said, guys, we have, of course, a very special Thursday host today. You know what it is. Our boy Justin Wise returned. Let's get him on screen. The man is here. He is on screen. How are you doing, Mr. Justin Wise? How is your day going? How are things over on the sunny climes of Colorado?
Beautiful. Thanks, Jack, for the introduction. Hopefully you guys are doing fantastic today. We've got a good show for you. We're going to talk a lot about the markets. It's nice and sunny out here, but it is starting to get a little chillier as we start moving into these months. But I'll tell you one thing: people who don't live here think that it's cold here all the time. It was 60 degrees yesterday. 70 degrees the day before that. So count your blessings.
Yeah, wonderful. I'm kind of jealous. Over here, what winter is really starting to bear down on us with a vengeance. So not really looking forward to that. But how's everything else? This market's looking pretty wild. I guess we're looking forward to getting into the TA today. I guess you do have a lot of thoughts. Well, hopefully a lot of thoughts post this breakdown from 60K. Were you so shocked at all to see us break down?
One thing about being a systems trader is, you want to put yourself in a position to never be surprised by the markets. Just put yourself in a position to act or react based on what happens. And that's exactly what I've done today. Moved some funds around and prepared myself for what could be the next leg down. Market structure has changed, and we're seeing a pretty important day today with the daily close that's going to be determining the kind of more what the trend might be here in the short term. So we do have a break of structure on the weekly. We'll get into that and we'll look at that. And we are currently seeing a flip on the daily. So interesting things to look at, interesting things to know. We'll definitely get to that here in a few moments.
All right. So a bit of a reversal of fortune, a little change in the trend, guys. We're going to get into all that in a minute. Let's go ahead and get into the news, guys. I'm going to put Justin away for now. We'll get back into Justin's webcam view in a few minutes. In the meantime, we have a bit of news I want to get into today. Of course, we got a 90-minute show in store for you guys. After the news, we are going to hop into the bubbles. We'll quickly check in on how the alt space is faring before we get into the audience engagement. Yeah, I look forward to shouting everyone out in just a few minutes. And finally, we will, of course, get into your requests in the latter half of the show, as well as, yes, the TA segment comes your way as well. All right, let's go ahead and get this first news item. Comes from Cointelegraph, and I'm mostly going to be covering the headline, which is Bitcoin falls to 1 month low after a 6% dive, drops Bitcoin's price to 56.6K. That's right, guys. Diving as low as 56.5 in this breakdown overnight. Of course, this article goes to the TA. I'm only here for the headline, guys. If you're just waking up now, indeed, we have broken down pretty sharply below 60K. The TA, though, we're going to get into that in a few minutes. Let's go ahead into the next news story. This one comes from News BTC. Famed psychologist Jordan Peterson says, inflation be damned. He's going to buy more Bitcoin. Jordan Peterson's journey into Bitcoin is an interesting one for all intents and purposes. After talking with Dr. Saifedean Ammous, Peterson has now dug his heels deeper into the market. This gentleman here, Dr. Saifedean Ammous, I hope I'm pronouncing his name right, is an author that is well known in the crypto industry for his book titled The Bitcoin Standard. Well, of course, now I know I've heard that name before. Following the success of this book, he had released another book titled The Fiat Standard as a follow-up to his first book. Peterson has grown a large following as an author, clinical psychologist, and podcast host. He regularly talks about finance-related topics on his podcast titled The JBP Podcast. I mean, he's kind of a libertarian thinker, and it seems that a lot of libertarians seem to cross over into the realm of finance and how the state, I guess, manages central banking, right? So here's Peterson, apparently getting deeper into the Bitcoin bags. Justin, you're a bit of a JBP fan, right? What do you think?
Yeah, I had the opportunity to see him live in Iowa when he spoke at a conference. I've read his books. I think he's a great thought leader and just a great guy overall. This is really cool for me. I mean, this is like I try not to be a fanboy of anybody, but this is for fanboys, I guess, a dream come true. It's like the perfect blend of are the perfect combination of accountability and psychology and philosophy, with a lot of the underpinning philosophies and accountability aspects of the crypto anarchist community, of the hardcore cryptocurrency community. Well, when I say, I don't want to say cryptocurrency community, the Bitcoiner community, the sound money community. It's a little different from the crypto community nowadays, that we've gotten so big and we've got Wall Street bets aping in on everything. But I digress. It's just really cool. It's fantastic. Yeah.
It is.
Peterson has the ability to kind of elucidate some points that other people might not listen to. So
yeah, he's a prominent intellectual, I guess, in the public domain, and yes, here he is endorsing a Bitcoin, appropriately so, given again that he is a bit of a libertarian thinker, and something we talk about frequently on the show, guys. When does Bitcoin shine the hardest? Well, it's within this whole inflation narrative. Whether or not you actually buy into it, this you have to acknowledge that this is how retail, this is how Main Street, a lot of people are introduced to Bitcoin. It's through the idea that it is a bit of an inflation hedge, and here's Jordan Peterson touting it as such. With that said, let's go ahead and get to the next piece. The Fed has lost control of inflation. This according to Stifel's chief economist. Let's take a look. Let's see here. Lindsay Piazza made the comments about the Federal Reserve in an interview with the Squawk Box host Joe Kerman earlier this week. She is, of course, the chief economist over at the bank known as Stifel. Never heard of this one, but in a conversation with Joe Kerman on the Squawk Box, they alluded to the 1970s and referred to the 70s as a decade of inflation, kind of citing what's going on right now. During the conversation, Kernan was keen to stress that America isn't facing a repeat of the high inflation 70s, but at the same time, the TV host invoked that the maxim that the history doesn't repeat itself, but it often does rhyme. Stressing the importance of the matter, Kernan went on to suggest that inflation is effectively as bad as a tax for that. It's absolutely a tax, agreed the financial economist. I think that Fed has absolutely lost control of inflation at this point, she added. They continue to tell us that it's transitory and that the economy recalibrates and that we will see price pressures coming down to a more palatable 2% level, but we have to remember that wage pressures are also on the rise. Wage pressures tend to be more sticky. Piazza went on to predict that inflation would rise not only by the end of the year, but into 2022 as well, 2022, and the current rate of inflation in the U.S. is running at hot 6.2%. All right, so let's see here. Is there really much more of that substance? No, but again, this kind of dovetails from the previous topic, which again, it's inflation. All people are talking about. You got the current administration and the current Fed trying to downplay this as transitory, but indeed, maybe we are entering a decade that looks a bit like the 70s. What do you think, Justin? You think this inflation thing is something the banks will be able to get their hands around, or do you think we're looking at maybe a decade long inflating market?
Yeah, I mean, things are pretty terrible out there. This is the runoff from the financial crisis, where I initially got involved in trading in general, and then a little bit later found my way to cryptocurrency via futures and forex. But this is just exactly what Bitcoiners have been talking about for a long time. The idea of a sound money, all the warning signs, all the breakers being tripped as America has progressed through its stages of capitalism. Late stage capitalism is what I've referred to this as. This is the term. I don't think so. There are, of course, reality is always evolving, and government's response to crisis is always evolving. And lest we forget that America is a good place to live. Let's just recognize the reality on top of that. No cognitive dissonance, but the reality is that the financial the situation is relatively poor as it has been. On one hand, you have the ability to, if you're a go-getter and you're intelligent and you've educated yourself in the fields where that's necessary. So if you're a programmer, if you know how to code, if you know how to manage, if you know how to lead, if you're an engineer, these are all skills. These are all occupations that can pay handsomely and allow you to live a comfortable life. But for the majority of Americans, for a large amount of Americans who don't possess those skills, kind of the old guard, let's say, right? Especially individuals from, so I'm in my 30s, so my parents' generation and certainly their generation, the generation before theirs, they're kind of, their reality doesn't exist anymore. Where, you go and get that one job and you stay there and you retire, they give you the gold watch, that's not a reality anymore. The average millennial will have 39 jobs by the time they retire. So you have to be able to adapt, you have to be able to move, and governments aren't no different. But this is not a new problem. This is a problem that's occurred with every imperial state. This is a problem that's happened every time a nation has become too entrenched in their own corruption, too large, too big to fail, quote unquote. And they always fail. I'm sure if we were living back during the Roman times, we thought they wouldn't have failed. Earlier before that, in the Germanic, tribes, we thought they couldn't fail. The Persian Empire, so these central banks and central banking never plays out. It always they're always tethered to a nation, and those nations always fail. So, yeah, I don't think that they're going to get control of it. Absolutely not. And that's not to say things aren't going to stay good for a while, but the trend is clear. The trend is clear.
Indeed, the writing is on the wall, guys, and we can probably argue about the causes and all that. But with that said, the warnings are here and clear, and protect yourself accordingly, you and your family, as necessary, heading into these turbulent economic times. With that said, let's go ahead and get into this next piece here, the Daily Hodl, talking about Charles Hoskinson, how he proposes a different regulatory enforcement approach to crypto as a whole. Let's go take a look what Mr. Charles Hoskinson of Cardano fame has to say in a new interview on the podcast Thinking Crypto. CEO of the technology company behind Cardano says that the current regulatory approach does not work well with crypto assets. Quote, the U.S. needs to move to a functional regulation system instead of a definitional system. We've moved beyond the world that something is a commodity and that something's a currency and that some things are security. It needs to be regulated based on how it's used. You need a different regulatory system that doesn't really map so well in the U.S. because usually what we do is we create a regulatory body for an asset type. The CFTC handles commodities, derivatives are the SEC's purview, and so forth. We need to move to a system for regulation that has much better definitions for things. We don't really have a good definition of virtual service asset provider in the U.S. We don't really have a definition for what is a utility token versus a security token. These types of things, we really need a better functional model, and we need a better asset definitional model, and they need to be applied together. Hoskinson says a new enforcement approach is needed, saying that private financial surveillance does not work for crypto. He explains the downsides of suspicious activity reports, aka SARs, that traditional financial institutions such as banks currently submit if they detect potentially illegal money transactions. He says that means 99% of the time, it's not the IRS discovering something on its own or the SEC discovering something. It's actually reported to them by financial intermediaries. So when you remove all these financial intermediaries, suddenly you have this issue that you have made all the regulators blind. They don't actually know what's going on. They can't see things. So he proposed an approach that's suited for crypto. He says, I think the solution is to just to go through open standards. Basically say we can build into the transaction, into the settlement of the transaction itself, some adherence to regulation. That's not necessarily compulsory. It can be optional, but it's something that you could do. In fact, well, he's kind of flirting with something that actually scares, I think, a lot of crypto people, some kind of, serial or registration number, some kind of additional bit of metadata that, logs your transaction or, signs off on your transaction and does the appropriate, regulatory, I'm trying to get at here, but, in the future, this is something a lot of people were afraid of, where the government doesn't necessarily take over the protocols themselves, but they suddenly institute all this regulation and law that says, okay, if you want to send Bitcoin from here to Coinbase, you got to make sure you use that new transaction standard that includes signing off with your unique, government identifier. So, we can kind of keep track of who sends what to what, and they could make it illegal to potentially, like as Hoskinson says here, we can make it optional. Okay, sure, you can make it optional that that you could still execute transactions on a network without maybe adding your proper ID tag, but maybe they'll make it illegal in the future in your jurisdiction, guys. I know this is like wild. This is pretty crazy to consider, but I feel like we've taken the internet for granted for the last several decades, I guess, of its existence. I'm kind of worried that they're going to move toward a more permissioned model of internet access, guys, and including one where, yeah, we might get the regulatory clarity everybody wants, including Mr. Hoskinson here, but it might be one where they're like, yeah, you can use your blockchains, but you damn well better, be fully exposed, like you're fully verified. That's kind of the way the Chinese are kind of, in many cases, obligated to kind of log onto the internet and be kind of very upfront. They're kind of banned from using VPNs, and government surveillance of their internet browsing is kind of assumed. Sadly, guys, I think that's the direction we're heading in, and the government will even let us play with our blockchains. But sadly, I feel like you're going to have to KYC to do damn near anything. Justin, you got any thoughts on this one before we move in?
We're going to continue to see more things like this, as just crypto becomes more evolved, as it becomes more instantiated. There's a lot of institutional money in cryptocurrency right now. I'm trying to think of Willy Woo, the pretty famous Bitcoin economist. He made a chartist. He made a good point that he believes that the traditional crypto market cycles are over with, that we won't see these massive, 2-year-long 80% bear market corrections across the board. I'm not necessarily sure if I believe that, but we'll see, obviously. And his main reasoning for that is pretty important. If you recall what we were saying 2 years ago, right, maybe even 1 year ago, that institutions are coming. Well, the institutions are here. And when you get institutional money instantiated, they're going to use their leverage, their ability to lobby, to attempt to change regulation and laws in their favor to protect their investments. This is, one major reason. This is a contributing factor to why stonks only go up, right? Because these massive corporations, lobby for regulation and for laws that benefit their shareholders and their stock price, because that's what makes that makes the universe good for them. So crypto is no different, and I think that as we continue to see, it's kind of a double-edged sword, right? On one hand, there is going to be an aspect of increased perhaps user protection, or an attempt to do that, where it will be a little safer for your average individual to get in, like cleaning up rug pools and things like that. Like, all you have to do is go over to, you can go to TokenSniffer. I don't know if you guys are familiar with that. And that allows you to look at every coin that's being launched on BSC or any chain, Polygon, Ethereum, for example. And there's pretty much one every 9 minutes. There's a token being launched just about every 9 minutes right now. And I would say 90 to 95% of them are rug pulls or flat out scams. So that's dangerous for somebody that's really interested in this. There's DEXs being pulled open. You have to look at TVL locked. You have to look at the TVL of the farming pool, of the liquidity pool, all these things that you have to consider and that you really got to educate yourself on. And if you do educate yourself on those things and you're smart with what you do, well, there's lots of money to be made in the Shitcoin Casino. But it's just inaccessible and it's dangerous for your average investor. So I don't want to make the government's case here, but there are things that can be put in place that's going to make it a little bit more, hey, you can buy a basket of crypto assets, or you can buy these crypto assets, and you can just chill for 10, 20, 30 years like you would do with the S&P 500 and do well. So on one hand, that is good, and that will promote crypto adoption. But hand in hand with that is going to be things like this. Things are going to come hand in hand with that approach. You're going to see more tracking, more surveillance, more laws, and So one thing that's nice is that's what's cool about Bitcoin. Is that Bitcoin at its fundamental core is so decentralized, whereas a lot of these smaller coins that are relying on this institutional investment. So consider something like Cardano, for example. Cardano is a good example. Cardano is far less decentralized, significantly less decentralized than Bitcoin. And Cardano has large stakes. So, and feel free to correct me where I go astray here. I'm not the expert on Cardano, but because of their lack of decentralization, as opposed to something like Bitcoin or Ethereum, they're much more beholden to those smaller groups of individuals that have a stake in the network. And so those individuals have far more sway in the network. Those individuals, if they accumulate enough capital, are going to have the ability to lobby government for laws and regulations that they feel benefit them, may not benefit the community. However, there are lots of, for example, VC funds that are getting involved with cryptocurrency, where they have things like where they're validators, or they have the ability to make rules, where they are actually giving those voting rights to community members instead of themselves, because they want to empower individuals that have the network's best interest in mind. And I think that's smart investing. So dual side of the coin here.
Yeah, I guess in this case, it'd be a question of, in an example of Cardano, which way would the community take it? Because at the heart of this matter is really this idea that in the old system, they really did rely on the intermediaries, right, for the banks and the other guys to rat you out to the IRS. Are we going to have something similar like that in the crypto space? Will either the intermediaries either voluntarily adopt the system, or will they be regulated into it? And then will a community like Cardano, will they eventually be faced with like a choice, like, do we want to adopt, for instance, like protocol level KYC, right, where the government will let Cardano really take off, but you really got to adopt this this measure that really rubs privacy crypto people the wrong way. I think that's like a big showdown we're going to face, and I think that will be the big question. And indeed, investors, early stakeholders, they might be pragmatic and realize, you know what, I know this isn't what everybody wants, but by making this accommodation with the government, we pump our bags and we make the deal with the devil. I think this will be a big fork in the road philosophically, I think, for the whole space. We do want we do want adoption. We realize some regulation has to come with that. And we also realize that maybe there is a need for some consumer protections, but this is a very fraught with peril topic, when it comes to deciding just how much authority we want to give the government in this domain on the technology that fundamentally is about pretty much, giving no authority, almost no credence, right? With that said, guys, how are we doing on time? All right, maybe 5 more minutes of news. Let's see what else we have left. Just a couple more pieces here. This next one comes from ZY Crypto. 10 U.S. Congress members say current crypto tax rules can kill industry innovation. Yes, this story pretty much right in the vein of what we're talking about. 10 members of the U.S. Congress have voiced their dissatisfaction with the Infrastructure Investment and Jobs Act. The group expressed dissatisfaction with the legislation in a strongly worded letter to the Speaker of the House of the Representatives. A part of the law is widely believed to have unfair and negative effects on the crypto industry. That's right, guys, we've talked about it. The infrastructure bill, the $1 trillion bill that includes, pads all types of other provisions into it, including one that might turn every damn near intermediary in the crypto space, everybody in the food chain, into a broker of sorts. Everybody's got a report, including all sorts of other onerous regulations. Go ahead into this piece and I will explain more. While the Infrastructure Act has garnered accolades from several key players, the crypto industry has kicked against a certain provision embedded within it. A group of lawmakers voiced out their frustrations through a letter. 10 Congress people penned this letter to Nancy Pelosi and expressed concern over the wording of the bipartisan infrastructure framework. The bill was recently passed, and I think it's even been signed as it's written today. However, this bill would increase uncertainty in the crypto industry, pick winners and losers, and thwart the IRS efforts to actually tax crypto, all while eroding our country's competitive edge against other countries in the digital asset marketplace. The letter read, "We must have reasonable regulation on cryptos, but this legislation should not cripple the industry." And their angst stems from the wording around the digital asset provision, which includes a wide definition of the term broker and so much more. We've covered it, guys. I'm not going to bore you with the details. We've covered this quite a bit in recent weeks. But here are at least 10 congressmen standing up for us and penning a letter to the leader of the House of Representatives, or the Speaker, I should say, Nancy Pelosi. And dear Nancy, please, let's give this a second look, guys. This is a revolutionary industry. Come on, let's not sandbag it too bad with this ridiculous provision, guys. I, for one, think that I don't know. Maybe this isn't going to come to pass. Let's certainly hope. All right, we're low on time, so we're just going to quickly jump through the next couple of stories. NFL and Ticketmaster are launching a ticket stub NFT on Polygon. Yes, it's come to Polygon, and appropriately so, given how much cheaper their fees are on there. NFTs are replacing ticket stubs for the NFL, at least for the rest of the games this year. Epic, pretty epic, guys. NFTs finally. This is one of the spaces I thought with crypto would definitely be have one of the best use cases is ticketing, guys. Ticketing is a huge infrastructure required to kind of keep everything up and up. I think crypto really does help. The league today announced that fans will be attending games through the end of 2021 and will be able to receive a virtual commemorative ticket as an NFT in a Ticketmaster digital wallet. Wow, I didn't know Ticketmaster had their own digital wallet. Well, now I do. The NFT themselves will live on the Polygon network, just like Tom Brady's autograph platform. An NFT is a unique type of, obviously, blockchain token used to prove ownership over digital items. In order to claim their NFT, NFL fans will need to purchase a ticket through one of their licensed NFL ticketing network vendors, Ticketmaster, StubHub, or SeatGeek, or a team's corresponding ticket office. And then leveraging the emerging world NFTs is new and exciting, they say. And yes, here we go. NFL fans will now be getting a little NFT. This is what I'm talking about. This is how you get digital assets into the wallets of the everyman. You start bundling this with the other day-to-day goodies. Well, yes, like in this case, the NFL tickets. That's pretty good, pretty decent development. Moving along into one of the last stories. This one comes from Protos.com. Craig Wright used the Slack app to threaten an expert witness as they testified. Well, this one can only come out of the book of Craig Wright. Let's have a look. The ongoing court battle between Craig Wright and the estate of his friend David Kleiman took a bizarre turn this week when katana-wielding Aussie made subtle online threats to the prosecution's witnesses while they were on the stand. The trial took more than, let's see here, the trial's obviously over $60 million in Bitcoin. And lawyers for the Kleiman estate were preparing to wrap up and hand over the defense, but it's been reported that Wright's lawyer was disputing the testimony of Matthew Edmond, a digital forensic expert. Wright took to a messaging app, Slack, to make comments to the plaintiff's attorney, and he called it a clear intimidation tactic. As detailed by CoinDesk, the offending message said, quote, "You know you can sue experts who give misleading testimony, right? They shouldn't make statements of fraud where there is no evidence of intent." Edmund took the stand, right? So he's texting the witness and the prosecution, threatening them to sue them while they're giving their testimony on the stand. That just doesn't look right, guys. Well, Craig Wright clowning as usual. Even when he's up against the wall in court, he falls back on this old one, threatening to sue them. Yes, even as they're giving their testimony live. Craig Wright, I guess clown of the crypto space for sure. What do you think, Justin? This one's I guess I'm not too surprised. This man, I guess, is famous for acting out.
Yeah, I mean, what can I say, man? I
threatening the witness on the stand. Gotta love it.
Yeah, I mean, we're just, this, it blows my mind. People need a narrative, and honestly, I have no idea, like what the heck's going on with that whole thing. It's just so much easy. This is what I love about cryptocurrency, right? It doesn't matter who the hell Craig Wright is. It doesn't matter who whether or not Kleiman helped, contributed, whether they're fraud. I've read so much information and data about it. I've talked to some individuals that feel very fervently on all sides of the issue. The reality is, it doesn't matter, right? It doesn't matter if Craig Wright is Satoshi Nakamoto. It does, and that's the awesome thing about it. Just absolutely doesn't matter. Here's just one thing I can say. If he was Satoshi Nakamoto, then Occam's razor would suggest that he would have simply proved this by actually submitting cryptographic proof. There is too much game theory wrapped up in the idea that just because Gavin Andreessen and the other individuals that had GitHub repo access signaled that he was and that he had provided proof, so much evidence has come out that was not true. And what's great about crypto is it's very similar to PTP. It's if this, then that, right? If it was actually true, then that news and information would be disseminated. And there's so much financial incentive for any individual to step up and do this. It doesn't surprise me that it's him. So it doesn't matter. Yeah, it doesn't matter to the future of the network. Doesn't matter to the price. Doesn't matter.
Yeah, it's a real simple principle in this game. You know, the keys talk, right? If you control the wallet, you can very clearly signal to everybody in a in unambiguous manner, right? You sign the message, you make the move, you can definitely prove your ownership over something. And really, it seems like much of the Satoshi story and the fortune is lost to time. And it seems like these guys are just kind of on the periphery, trying to reach in. You know, it's already gone, but they're still diving in after it, trying to claim that piece, that throne for themselves. He's Craig Wright in this case. So indeed, this will we ever learn the truth? I don't think so. But Craig Wright, man, as much as you want to be given the benefit of the doubt, the way he conducts himself, including threatening to sue witnesses as they're giving their testimony, well. Go figure. Somehow.
Hey, I'll tell you one thing that just occurred. Just occurred to me. So from a strategy perspective, right? What he's doing is not unintelligent, right? So you got to think years down the road. What if eventually Satoshi's keys are recovered, or Satoshi himself or themselves actually step forward, right? Or again, let's assume that there's a lot of different things that could happen, but just any situation in which I could see a potential future where the private keys are actually somehow unearthed or unveiled. In a future world where Bitcoin has become, or crypto has become more regulated or just become more mainstream in our society, it's going to matter who has set the precedence of having legal claim to those keys. While I do not believe whatsoever that Craig Wright nor the Kleiman estate has the ability to access or could ever have had access to those private keys, what they're doing right now is establishing a long game strategy where they are going to set the precedence of having the legal right to those keys. And if he wins and the court rules that he has the legal right to those funds, then anytime in the future, if those private keys are ever recovered, then he's going to have the ability to access those funds. So that's what he's really doing.
Yeah, that makes it perfectly well explained. Yeah, it is indeed probably a long strategy and a very interesting precedent to set indeed, with everything still in the air. You're right, this seemed like a long shot for him to actually be able to execute on this, but with this much money up for grabs, who better, I guess? I mean, who's a better contender for trying to claim it? I guess Craig Wright is the one going for it. Interesting thought to wrap the news up on. I guess, and of course, one other thing I will add is there are some people who feel that Mr. Kleiman did, in fact, might have actually had the keys to these particular coins, to this particular fortune. May or may not have been Satoshi, but at least had the keys, per se, to this fortune. There are some that think that Craig Wright did confiscate Kleiman's hard drives with the keys potentially on them after his death, and that he's supposedly working furiously to decrypt them, right? Because they're obviously encrypted. The guy was a security expert. It's possible he'll never decrypt them, but yeah, in a theoretical case, like Justin said, maybe somebody does come forward one day with the keys. Maybe they actually crack Kleiman's drives after 50 years, and Craig Wright can come forward and say, "I got the private keys. It was me all along." Will any of us be left behind then? We'll see. Craig Wright, of course, famously clowning on stand. Gotta love it. With that said, let's go ahead and get to the next piece, guys. We are going to look at bubbles very briefly. This is going to be quick because it's mighty red. It's single-digit losers across the board. Let's talk about a couple outliers. Sand. Yes, the Sandbox tokens up another 30% today. Absolutely epic run on Sand, approaching 4.5 USD. I believe Sand is preparing to launch. It's preparing to launch. It's like alpha or it's beta, whatever you want to call it. The pre-release, their early access, is coming live in the next few weeks. They're going to be like a 3-week test run with limited, slots open for the public. Currently, you have to hold sand in a wallet, I think, to get access to that. So I think sand is continuing to pump on the back of that news. People want to get early access. They got to hold sand. So there's buying pressure. Up another 31% today. Algo bucks today's trend. Algo's up 13%. Big shout outs to Algo, Sylvia McCauley, and our boy Justin Wise, who interviewed him. Wow, was that really two some odd years ago? Do check out our playlist. We got that interview. Shout outs to the Algo holders out there. Mana is also up 13%, but everybody else is down big, single digits, high single digits, 5 to 10% across the board today. Bitcoin dragging everybody down. Let's go ahead and get into the next piece, guys. We have the audience engagement. Who's kicking with us in the chat? Yeah, Mr. Justin Wise mentioned earlier that Professor Wally came through with the super chat. Let's see if I can find that. Let's start with the super chat. Big shout outs to GBU Professor Wally, $20 USD super chat. Reagan, if it moves, tax it. If it keeps moving, regulate it. If it stops moving, subsidize it. While I have your attention, and please add the following too. Yes, thank you, Mr. GBU Wally, with that famous Reagan quote. I will certainly add your 2 requests to the request line, and much thanks again for the $20 super chat. It really does go a long way around here. Mr. Ether, big shout outs to you on YouTube. 52K, come on baby, I got an entry there. All right, Mr. Ether, looking to snag an entry, little buy on 52K. Daniel N on YouTube. Hi guys, big shout outs to Daniel. Dave Rice, good morning everyone. How's your shorts feel? Well, if you did catch this one on the move down, I think Jason's trade that he posted to the group hit TP1. Congratulations to everybody who made money on this leg down. Any word, big shout outs to you. Good morning. Mr. Ether, music sounds like it's on 2x speed. Or which music? The background music?
I think he's talking about the intro
music. Well, we gotta get the energy up in the morning, Mr. Ether. We gotta build it up fast. On the afternoons. Any word, requesting missed. Okay, I see your missed request. We'll add that to the line. Crypto Bull 21 is with us. Big shout outs to you. Franklin MC, greetings to you. Jason's with us in the chat. Don't you just miss Iowa, Justin? Good question. How are you acclimating to Colorado? Are you like in an elevated part of the Colorado? Like, are you higher up elevation?
5,000 feet up.
Damn. So how is that? Tell. How does that compare to the flat sea level terrain of Iowa?
Oh, I love it. I'm not gonna lie. It's so great and beautiful here. Like the sun shines so brightly. I get to see the mountains. It's a better place.
You feel it in your body at all? Does your body like breathe differently or sleep differently in the higher elevation? I always hear people take time to acclimate. Is that true?
Yeah, I mean, I didn't have any issues acclimating. My daughter kind of took some time adjusting. She got, her nose is really dry, and humidifiers are kind of necessary here because the climate is pretty dry. But I mean, just overall, I really love it out here. It's one of the best places to live. I've been a lot of places.
Well, there you have it, Jason. I guess the answer is no. It doesn't miss Iowa. You're stuck out there all alone, buddy. It's okay. You got me on Discord whenever you need me, bro. Shout outs to Justin, who abandoned you back out there. All right. I hear Alex's door in Puerto Rico is open though, so maybe we can meet down there, Jason. What do you say? Franklin MC, I lived in Firestone, Colorado for 20 years. Cool. Big shout outs to the big Colorado family in the house. Crypto Bull 21, sunny and 50 here too. I believe Crypto Bull is in Washington State. Yeah, he's Mr. West Coast over there. Tim A, big shout outs to you. Alex 81SG. Yeah, we had a lot of Tim Allen jokes on the show a little earlier in the week. Those were good times. Alex 81SG. Hi guys, Black Friday happened earlier in crypto. Yes, the Black Friday sale is here. Or prepare for even deeper discounts coming soon. Jason, gotta love me the news when it's reporting on crashes. Meanwhile, you're hitting take profits. Yes, there's probably something very satisfying about that. This is where, there's the cue the emojis for this one, right? Rage Wojak versus the Chad trader. Sweeping those take profits on the way down. 907 Alaska. Good morning, everyone. Wow. From Alaska to Colorado, we're covering all types of interesting American territories today. Big shout outs to Anyword who's with us today. Jordan Peterson, can't comment on those topics, Mr. Anyword, but shout outs to you nonetheless. Jason, is that a real project? It could be. Let's see here. Who else is with us today? Are we almost at the bottom? Crypto Cats is with us. It's a red day, and I'm in the sauna sweating all the FUD out. Yeah, that's one way to get some of the stress out, especially if this market caught you off guard. You might want to take a step back. Let's see here. I'm going to cover a couple more comments, but we're running low on time, so I really do got to swing past all of these. GPU Professor Wally, of course, he gave us the super chat earlier as well, saying subfools, big hello to you. Let's see here, who else is with us? I think that's about everyone. Somebody new, Barb's Famcam. What should I do with 2,000 right now? Well, my man, what I think you should do with 2,000 is don't do anything at all. Sounds like you're looking to come into a casino, looking to make a gamble on the right table. Don't do that. We're here to advocate responsible trading. Of course, we don't really give trading advice, any investment advice on the show anyway. Everything is for education purposes. But Barb's Famcam, if you watch the remainder of the show, you might find some of the analysis interesting enough. Suit you as guidance. David Rice, they said Jesus was coming too, and they wrecked him when he got here too. Okay, well, yes, there's lots of things that come in. Real life Squid Games. Okay, says Jason. Yes, the trying to trade these markets with all the sharks in the water pretty much feels like real life Squid Games. Question is, well, you know, I haven't actually watched the show, so I'd love to expand on this reference, but I don't really got nothing because I don't really know what happens in the show. Craig Wright, he's the one that needs a few gallons flung at him. All right, says Joan, I love the show. I feel you with that sentiment. Andrew Muntz is with us. Moonshine Fuel, Rhino TD, Cryptonomics, Profit Bear, Andrew Muntz, B-Flow, and so many others, guys. I'd love to read all your comments. I really would, but we're running low on time. We got to get into the next segments. TA, brought to you by Justin Wise. Yes, the man, the myth, the legend comes your way next. It's what you're all here for. Let's get into the TA right here, right now. Justin, let's go see if he's screen sharing. Oh, yes, he is. Of course he is. We're going into that scene right now, guys. Here we are. We are in the main scene. All right, Justin, if you'd like, you can flip your camera on for this segment.
Let me just make sure I got the right one. I do not.
No problem. We'll switch that out.
And boom.
As for the rest of our very loyal, amazing audience, get your requests in now, guys. I'm going to start logging them and putting them on the top right of the screen. In the meantime, Justin Wise will take you through his look at the markets. I'll be back in a couple of minutes. Take over from here.
All right, excellent. Thank you so much, Jack, for going through the news, taking us through everything. Shout outs to everybody in the audience today, whether you're watching us on YouTube, whether you're watching us on DLive or Twitch, or I don't even know where else we stream anymore, but possibly all of them combined. So it's a good day. I should have never pumped back up to 65K to begin with, B-Flow. What are you talking about? Didn't like seeing that yo-yo of your wealth equity? All right. So let's we're gonna keep things relatively simple as we do here. We're gonna go through trend following strategies. We're gonna talk about opportunities here in Bitcoin. We're gonna look at a couple past historical occurrences, and we're gonna look at some higher time frame stuff as well. But I'm gonna keep it pretty much relegated to the daily here and just talk about kind of local trading opportunities and two main possibilities for what could happen here with Bitcoin's price moving forward. Okay, so for those of you following along at home, I am using CC indicators that we've developed and that our premium members have access to. A lot of you guys in the crowd are going to have access to these indicators. I'll go through some settings as well if you guys are interested, but here on my chart, I have Minx at the top. We're going to be using that as our initiator. We're also going to be using that to kind of let us know when tops and bottoms of the market are in potentially. Of course, we're going to be using probably our most popular indicator, Wadatar Explosion. This one actually is free to use. Anybody can apply this to their chart that's on TradingView. Just search for cracking. All you have to do is type in cracking on TradingView in the indicator widget, and you can find any of these indicators. New addition, and one that I've been using for a little while, and I thought I'd like to highlight it here on stream. And this is a good So a lot of individuals going through the PTP course seem to struggle when they get to the volume indicator portion of the course, and for good reason. Volume indicators are tricky. Volume is difficult to interpret. Depending on who you listen to in the trading world, some people will tell you that volume is everything. Some people will tell you that volume is nothing. Neither of those extremes is correct, but volume certainly can be important. And there are traders out there who just watch volume. It can be a little tricky in cryptocurrency. Because volume on one exchange is going to differ dramatically from volume on another exchange, and therefore the pattern of volume might be different. In general, I tend to find volume oscillators a little bit better, a little bit cleaner. Probably my favorite is going to be something like the money flow index. But let's just go through using, this is colored volume bars by Lazy Bear. He's one of my favorite Pine creators or script editors on script creators. There we go. That's the right word. Thanks, Justin. On TradingView. And you can use this in and of itself in a simple swing strategy. The way that this indicator works is if price and volume is higher than, let's go in here to the settings. I have the look back set to 10, okay? So if price and volume are higher than the candle 10 bars prior, then the candle's gonna, the column is gonna be printed green. That's a bullish sign. If price is higher but volume is lower than 10 bars ago, the color is blue. And conversely, if price is lower and volume is higher, the color is red. Price is lower, but if price is lower but volume is lower, the color will be yellow. Okay, so the way that this is a strategy that was the Lazy Bear just imported. This is out of stocks, or trading stocks. I can't remember who actually came up with this. It's referenced in his it's referenced in the documentation for this indicator. But the simple swing strategy that they propose is simply entering on blue or green bars, and once you get a blue or green bar, you set a trailing stop. 1.5 ATR is actually, I believe, what they recommend, which is interesting because that's what we use with Quadriga. And then you just allow that to run until your trailing stop hits. That's an alternative entry method. We've talked about that before, but that's a good trailing stop methodology. So in our particular situation, we're going to be using it as a volume confirmer, a volume confirmation indicator to confirm the direction that we want to trade in, to let us know when the signals are correct. And the way that I've been utilizing this is when we're looking for a long trade, we are going to be waiting until the volume bar is green. And if we're looking for a short trade, we're going to be looking for the volume bar to be red. And you can use this alternatively as a scaling out indicator or a take profit indicator. So for example, when the volume bar, so let's say you're in a long trade, you've gotten that green confirmation. When the volume bars switch to yellow or red, you can use that to scale out. You can also that's a conservative approach. You could be more aggressive and scale out once green flips to blue, for example. Or when red flips to yellow, for example. But I'm not going to be using it as an exit indicator for this particular case. I'm just going to be using it as the volume confirmation. So let's just look at current price and see what we've got going on. We've got two possible options here for Bitcoin. We've been in this good range, I would say, all the way since we hit the last all-time high on the 20th of October. We did come up and sweep that, of course, just a little bit over a week ago, toward the beginning of November. We actually put in a little bit higher on the 10th. The 10th of November is the current all-time high for BTC. And we've had about almost a 20% correction down from that peak down to the trough. Now, this is going to be the second test and actually currently equidistant low. Let's actually go in here and see where these lows are on Bitstamp. We've got the low here that we put in on the 28th of October at 56,425. And what's the low of today's candle? 56,565. So currently forming a higher low. And after we were actually trading into the channel of the baseline here, and just for reference purposes, I'm not actually using the Hall 60. I'm using Eller's EMA Smoother for the length, because again, I've gotten multiple comments and just that's what I've been using in my own trading, because as you can see, it really does eliminate chop. Now, the trade away here for using Eller's EMA Smoother as opposed to the Hall, and this is why, for example, Jason was already in a short and why I am still spot long, but we'll talk about that here in a second, is because the Hall 60 is more sensitive. It's going to get you into trades more early. Again, for those aggressive traders out there, that's going to be attractive because you're going to get those earlier entries. But you have to have the ability to filter out more false signals, and you're going to have just in general a higher loss rate than using something smoother. Your gains are going to be more frequent, but they're typically going to be shorter, and using a less sensitive system is going to give you less trades, less false signals, but at the expense of later entries. Now, as a more mature trader, I prefer that latter approach. However, of course, these indicators that are available to our subscribers are able to be modified to fit your trading style and strategy. So let's talk about where we're at. So price is coming down and testing the baseline. So let's talk about the bullish scenario case. Now, from a fundamental perspective, I am a Bitcoin bull. I do follow things like the stock to flow model. I do look at a lot of the indicators on Glassnode, and none of those indicators are giving warning signs that we have actually reached the market top, whether we're looking at the Z-score and the RV, whether we're looking at actual network activity, whether we're looking at value locked on the network. There's no warning signs for a market top, and we haven't had that yet. So I would like to say that what I'm seeing in the market here is reconsolidation. And I do think from a fundamental perspective, I'm pretty set on that $100,000 Bitcoin target, Q1 of 2022, even Q4 of 2021. Now, that's my fundamental perspective and bias. But of course, when it comes to my actual wealth and capital, that's not investment. Keep in mind, guys, I invest in Bitcoin. I also trade Bitcoin. So what I'm going to be doing with my trading account is different from what I'm going to be doing with my investment stack. I have been holding Bitcoin for, since 2016 now. When I first began investing in Bitcoin, I still hold that Bitcoin in my cold storage wallet. I do not mess with it, right? I just add. Right. So this is a situation where if price were to get a little bit lower, I wouldn't actually mind adding to my long-term stack. But to be fair with you guys, I'm actually investing more in other projects. I'm fairly happy with my Bitcoin stack at the moment, fairly happy with my Ethereum stack. And as far as long-term investments go, I am pretty involved and trying to be pretty active in things that are seem to have potential that are launching alternative networks like BSC, Polygon. I'm quite a fan of Moonriver, for example. I've read actually quite a bit on that. Cake is a good token that I've put some money into over the last 4 months. Okay, so let's talk about that option right there. So if price is able, the daily close here is relatively important. For me, if we're able to close back above where the baseline is currently sitting at, and let's actually just get a good gander on that. Let's open up our data window and we'll look at the actual value of the baseline. The baseline's at 57,932. Upper channel is 58,553 and 57,312. So if we're able to close, as long as we close above 57,312, which we're $600 above that right now, you have the opportunity for a reversal baseline bounce. This is actually going to be a buy the dip or, get in on dip opportunities. Now, I don't think that we're going to break out of this imminently. It does seem like we're going to continue to range here if that is the case. If we were looking for that trade right there and you did take the long from here, which keep in mind, I'm not doing yet. I need to wait and see how the candle closes. Then we'd be looking for an initial target of around 61,000. And I think that's relatively conservative. I think we could actually go back up to 64,000. Now, if we only go to 64,000, that would start to look like a failure to achieve trade, whereas this was a pretty classic swing failure pattern. But moving up only to 64,000 would be retesting this level of daily supply. And if we move down from there, that would be an opportunity to get in on a short at a better level if you're not trend following, just looking at overall market structure and kind of expecting a more significant correction. So there's the strategy for that. For me, the trend following trader, what I'm going to be watching for is that close below, because as we see, all our other indicators are actually signaling for the short. Minx, which is my favorite indicator, has actually crossed below the zero line or the initiation level, and that's going to be a powerful signal for a short. Okay. Now, again, if one beautiful thing to watch for here is if price is able to hold the baseline and then we get that cross back over. Okay, that's going to be, again, another confirmation of a reversal baseline bounce. And for those of you who are more conservative and don't want to buy on a red candle, who would prefer to buy on a green candle, it's another sign of confirmation that you can get. Now, looking at Wadatar explosion, we do see that bearish momentum is rising. We have 3 now consecutive larger red candles on the Wadatar explosion indicator. We also have rising momentum, which means that the distance or the size of the candles is increasing. Now, momentum is important because what has momentum what an object in motion tends to stay in motion. So this is a relatively bearish sign. And again, if we look down at our volume indicator as well, that's CVB, we see that price is lower and volume is higher than 10 days ago for 3 consecutive days. And this is the first time we've seen that. Let's see here. Since we actually had this correction down over here. Now, this correction was just a fake out. We didn't actually get a big bearish trend out of here, or even really anything tradable. We did have an entry on this candle. You did have a short trade on this candle. And based on the volatility that I see here, very low, actually relatively high volatility, but low momentum, I think we actually would have hit our take profit on a short on that candle. Let's go see. So let's see here. We are going to, the bottom feeder trade did not hit its take profit. We're going to flip on Quadriga for this particular candle, which is our stop and target system. Let's turn bottom feeder off for a second. So yeah, the last time we had a signaled short, even though the market didn't move very much, it indicated a take profit of 40,555. Now let's just go forward and, whoops, that's not what I wanted to see. Back here. Now let's go ahead and mark that level off. Horizontal line and get rid of Quadriga. Do we hit that forward in time? And yes, we do. We did actually, using our strategy, we would have hit that first take profit with this particular PTP implementation that I'm looking at. At that point, we would have moved our stop loss to break even, which would have been here to ensure that we're in a no loss situation. And again, just so you guys can see in real time or in back time, what would have happened. The very next candle, we would have been out at our break even. We would have made some money on that trade and we would have been safely out of the short. And then we see our price just kind of ranges and consolidates around again. We move forward in time, and what happens on this candle, we don't have the long signal from Minx. We don't have the confirmation from volume. Wadatar explosion does let us know that price is turning bullish with the rising momentum and the green column above the explosion level. But let's just see and wait for when our indicators catch up. Maybe, I don't think on this bar. Let's actually go back one and see. Data window, does Minx actually... No, Minx is negative on this bar, so we go forward one more day. And we do get that positive reading from Minx. So we would have been, yep, rising momentum. We do have that blue volume bar, so let's actually wait. Ah, there we go. There's the green volume bar. So if you would have been aggressive and just used the blue entry you have been in the long on this candle, let's see if we would have actually made money getting long on the subsequent candle. So take profit of 54,906, and we'll move that stop loss up here. I feel like this is a losing trade, but we're gonna find out. Winning trade. So on the very next candle, we hit that first take profit, which means our stop loss would be updated to our entry price, and just let price continue to evolve. And there we go. We would have been stopped out on that Darth Maul candle. And here where we have signs for continuation. You have a correction. Seems like Minx really stays above that whole time. So if you were using a wider stop loss, that would have been fine. Let's see here. And then we have that exit signal right there. So whether you got out here for a small profitable trade or whether you were actually able to hold the trade all the way up there, using a stop loss timeout would have really helped out. Actually, one of my alerts just went off. Let's see what happened. Atom BTC. Excuse me. Bybit on my ISIS bot just actually opened up a short time frame long, so interesting to see. We'll go take a look at that here in a minute. All right, so let's get out of the history and let's just go back to current price. So reversal baseline bounce on the table. On the other hand, if price ends up closing, I know where our baseline is here. If price actually ends up closing below 57,932, then again, with the confluence of indicators that we have, we actually would be looking for a trending short with initial targets of 54,900 and 51,770. Now, I want you to note that second take profit there, which I feel is a fine correction. That 52,000 number is on a lot of minds. I've heard a lot of traders talking about that, and for good reason. Let's go back out to my Let's go back out to a different implementation. We're on the daily time frame here. And here we're going to be looking at the 200 smooth exponential moving average. And I want you to pay attention to this market structure that we have right here. This is the correction, the 50% pretty much correction that we had. 50% correction that we had coming off the first touch of the all-time high back in April. We see price consolidate here on quite high volatility before we reclaim the 200 and move back up. We actually have a double test of that. So we establish an order block on that move. Order block, for those of you guys who don't know, is the last up candle in a bullish trend or the last red candle in a bearish trend, and often acts as a significant level of support or supply for price to retest and touch and hold. I think this also, if we look at this range, I want to see excuse me, should have done visible range. Visible range. Excellent. Okay, so we're looking at the visible range. Yeah, that's gonna that. Cool. This is the volume profile visible range, and what this does is it lets us know where the majority of volume is by price. So we've got a couple interesting things to note here. Right where price is testing right now, we are testing a significantly high volume node. This means that at this level of price, lots of volume was transacted, and you can see that from over here. Right, there was a lot of agreement in the market and a lot of Bitcoin changed hands here. This is a lot of distribution that occurred before the eventual sell-off. Sellers overwhelmed buyers at this level of the market. You can see that from this level of volume, and price goes down. Now, this level has already been tested. This is relatively important. And one thing to consider too is that we want to look at. We can see. So I want you to understand. This is what makes sense why price struggled here a little bit. When we ended up rallying, you can see that we struggled here and we also struggled here for a little bit. You see the momentum slow down. And the reason for that is because individuals that bought here took this opportunity to get out at break even. And now we hope for the bullish case that individuals protect that area at this high volume node, that individuals step back in and protect their buy-in area because they don't want to go into drawdown. Obviously, the highest area where price traded was all the way down here at 47,000. Again, a little bit of a stretch from that order block of around 52,000. Now let's go in and see on this recent rally where the buyers were instantiated. So again, the issue here too, and this is making the bearish case. If we stop looking at that older historical data and just look at the current price, the more current price, starting from the rally off the test of the 200 EMA, and then this little distribution level, and now obviously the sell-off, is that we see the exact opposite. We see that 61,000 acting as resistance. Why? Because individuals establish their buys and sells here, and so should price return to that point of control, we can expect buyers. We can expect buyers to begin selling at break even to recover their losses, because right now they are in about percent drawdown. Okay, they are here only about 5% drawdown, so we'll see. I like that confluence, and one thing to note is that should price return, let's see, this, really like where we kind of see this rising confluence of the 200 exponential moving average rising up to meet that order block area. Again, that's the last green candle in that bullish trend. Note that order block also kind of corresponds to where that level of volume is, a little bit higher at 64,000, but interesting to note. And I think that we're going to see that 200 EMA eventually rise up to be in that $51,000 area. So should price continue to correct from here, 48,000 to 51,000, I think are going to be our areas where we need to see the bulls hold the longer fundamental trend here. These levels, this 200 EMA is going to line up perfectly almost with the weekly levels that we established earlier. And while we're talking about the weekly chart, I do just want to point out, for the sake of consistency, I was talking earlier about the health of the trend as we were maintaining not only the TD sequential count on the way up with Bitcoin, but also maintaining that weekly Heikin-Ashi structure. And we now have a weekly Heikin-Ashi trend flip. So we have switched. We've had 6 weeks of green candles on the weekly time frame, so a good 6 weeks of appreciation, and we've flipped into our first red candle. Don't mind the dojis. Don't mind the actual candle structure on Heikinashi charts. It's just manipulated price. But what is important is the colors, because Heikinashi smooths out trend data. So we did break above that TDST line. We are currently holding it, right? We are currently above that significant resistance level. But but again, the thing that concerns me is the weekly trend flip. So although I am a Bitcoin bull, I do like to trade the chart in front of me. Do I think right this moment is the best entry for a short? I don't. If we go down to the lower, so if you guys are looking to get in on early on that early trend flip, if you guys do have a bearish sentiment, I would be a little cautious right now. One strategy that we've talked about quite a bit is looking for those big volume spikes and trading the scalp to the reverse. This is a very classic and relatively profitable short-term strategy. And what can we see here on the 5-minute chart on Bitcoin? We've been in a downtrend for quite a while, and we recently just had a big volume spike to the downside and a pretty swift recovery. So I would see, I would like to see some upside for Bitcoin here over the next several hours, if not maybe moving into the weekend before we actually close down below that. And honestly, consolidation, going back to the daily chart here, sideways consolidation above the daily baseline would be a beautiful thing to see and kind of give us a little bit more opportunity for that reversal baseline bounce. So honestly, I think that the appropriate play here is most likely is establishing yourself for that reversal baseline bounce, but just being very cognizant of the fact that if price does cross down below this baseline and continue this bearish daily momentum, we need to be looking for a short. We need to be looking for a short. Again, let's talk about those targets one more time. 54,948 initially, 51,814, and 48,682. And note how the with the exception of the 54,000, actually no, all three of those levels, all three of those take profit levels that Quadriga is indicating for us to take. Let's go note those levels: 54, about 55, 52, and 48. Okay, let's go back to that daily chart where we were looking at market structure, and again, let's note the confluence here. Okay? So where is the order block? 52,000. Okay, if we look at this level, let's see here, hold on, let's get level of distribution. Where's the 200 exponential moving average right now? 48,000. We can also see that was the previous level of support from not only the range when we reached the all-time high again, but also the level of resistance that we struggled to break over before this recent rally to new all-time highs. So we have confluence there, not only with our order block and the 200 exponential moving average and previous support. So that is a nice thing to see when you're looking for the validity of your take profit targets. Okay, here. Again, 4-hour market structure broken. We were in this uptrend. We came back down. Didn't really move back up to test this level as support. As previous support turned resistance. But you'll often see that happen more with horizontal lines than with diagonal lines as well. So nothing much here. We did have, in my opinion, an unprofitable reversal long signal by our ISIS bot. But let's go and look at, now that we've talked about that, let's go over and look at Ethereum. And we're going to be in a very similar situation here with Ethereum, right? Ethereum actually a little bit more bullish than Bitcoin. If we look at Minx here and pull open the data window. So, and if you guys, so for those of you guys who are CCers, I've just made some graphical modifications to Minx to make it a little easier to see on screen. You guys can easily do this on your own charts. But if we note here that Minx actually has the value of Minx is above 0, which means that that is indicating a bullish trend. All right. Now, of course, it is downtrending and it's about to cross that initiation level. We do have the rising momentum from Wadatar explosion with green columns, and we do have the red volume bar, but we haven't crossed the baseline and we don't have the initial signal to short from Minx. So really nothing to do here with regards to the trade. The only thing here on the table again is that reversal baseline bounce. If that was to be a successful trade, or if one were to enter that trade, again, we're going to be looking at an initial target of 4,324 up to 4,580, which I'm going to kind of note out that 4,580. I feel like that would be. Oh. Yeah. If price were to rally back to 4,580, that would be, again, a retest of the supply level and also a retest of that trend line that we were following pretty religiously for almost a month, a little bit over a month, since the 11th of October, over a month to the downside. As you guys can see, the broken trend and then recovery here. So I do see short-term play up to 45,000, up to 4,580, just as I saw that short-term play Bitcoin similarly. But again, just steel yourself, guys, because our indicators are also turning largely bearish and across below that baseline. And keep in mind, I'm using an insensitive baseline. Those of you who are using the Hall 60 like Jason, we're already in a profitable short. I've already hit a take profit on this. So this might not be a bad opportunity to look for that not counter trend trade. We're still bullish, looking for that bullish trade back up to the upside and look at that dip as a buying opportunity. Okay.
Yeah, we're a little bit past the hour. If you want, we can get into requests soon. We don't have too many to look at today. I think people are a little conscientious of how many requests we usually do on Thursdays. I appreciate that, guys. With that said, back to Justin. Let me know whenever you want to get into the next segment.
Yeah, we'll get into the request here in just a moment. I wanted to take an opportunity to, this is something that I am constantly trying to increase my knowledge of. And this is going to be the realm, I call it the Shitcoin Casino, but like I've made some good money off of it. I feel like a lot of you guys have as well. It used to be last year, it was just Ethereum, right? With DeFi, looking at all the different DeFi protocols that we're launching, DeFi coins that we're launching. When Uniswap first came out, the Uniswamp and all those rug pulls that were occurring. And it's I was talking about this earlier. It's a dangerous kind of world to traverse in, but of course there's fantastic profit. I mean, if there's projects that you feel strongly about, like I like Cake. Cake is a good project to me. And you invest in their tokens and you utilize them on their platform to earn yield, to yield farm. You can use those as leverage to get loans to leverage up your position and earn yield on those as well. Lots of cool opportunities. And of course, many of you are not going to be immune to the strategy of minting NFTs that are launching, trying to roll them as a quick flipper, or holding on to them for the long run as something that can be potentially very lucrative in the future. Like imagine if you were able to get in on the ground and mint an Axie, which is a game that I play, by the way, or imagine if you were able to get in on the crypto, like anything. Of course, you have these success stories. And while I strongly advocate that individuals pick something reliable and stable for their primary form of income, I'm certainly not immune to the sway of getting in early on good projects. To that end, I just wanted to talk about two websites that you guys can use to kind of protect yourself when you're looking at potential coins to buy. These are relatively new tools to me, but I've been using them relatively frequently, and I just wanted to talk about them a little bit. Okay. So the first one is going to be TokenSniffer. I think it's TokenSniffer.io, actually. Love it. Let's see here. Let me try opening up a second here. So TokenSniffer is a website. I just had to use a private. I'm VPN'd up. So TokenSniffer is a website where you can search by a contract address and see if it is likely or less likely to be a rug pull, a scam, or a hack, right? Additional things that you can look for, like total value lockup in a contract, additional things that you can look for are, you know, how much does the creator of the contract have? So for example, let's just go in here and we'll look at newest tokens. And as we can see, like just in the past 7 minutes, all these tokens have launched, right? And I know that 90% of them to 95% of them are going to be absolute scams. So let's go look at this one, Retro Doge. Complete the CAPTCHA. Ooh, I'm an expert. Mountains and hills. I think that's a mountain. That's a hill. Gee, I'm a freaking expert. Okay. So we can see that this is on the Binance Smart Chain. We can look at the chart on these particular, we can look at the chart on these. Here's the transaction that created it. We can see when it was deployed 1 hour ago. We can look at the creator. And then they give us this. This is actually not a bad score. So 100 of 100 is there. This is not a scam. Whereas 0 of 100 this is absolutely a scam. So we can look and see that token is sellable at this time. So if you actually get involved with this contract and deposit, you know, if you were to exchange, let's say BNB for this particular token, you would actually be able to sell it back into the pool. That's one thing to look out for. So the next website we'll look at is honeypot.is. Buy fee is less than 5%. Sell fee is less than 5%. So it's very expensive to sell, which means that if you get involved with this, it might be financially, you might have a financial disincentive to sell, which is going to kind of keep you trapped longer in the scam. The contract source is verified. However, there are highly similar contracts that were deployed prior to this one, which means this is most likely a copy and paste script. This is very easy to do. Like you can make your own Ethereum script and Remix and deploy it extremely, very, very quickly. For those of you guys who don't know, Remix is an IDE or an integrated development environment. So very much like Visual Studio Code is an IDE that you can use for many programming languages. I use Visual Studio Code for Python, JavaScript, and Pine. And we see here, let's see here. Now, this is the big no-no for me, right? The contract contains ownership functionality, right? So generally, when you deploy something to the chain, if it's a good project, they've done their work in advance, and they renounce. This is not always true, but typically what you'll want to see in a mature project is that ownership of the contract has been renounced. If that hasn't happened, then the whoever deployed this contract onto the blockchain can mint more tokens. They can change the contract behavior, like disable your ability to sell into the contract, for example. Now, we do see that the owner or creator of this does hold less than 5%, and there is no significant whales that hold more than 5% of the token. There's liquidity, 2.53 BNB, and at least 95% of liquidity is burned or locked. So again, this looks like a little bit of a better scam, and I don't want to say anything nasty about this. Of course, I don't know anybody or anybody who's done this, but this is just a really good tool that you guys can use before you go start buying rug pulls. And just real quick, the other website is going to be honeypot.is. And honeypot.is is going to allow you to avoid rug pulls entirely. So if you are interested in buying a token, get the contract address, whether it's on BSC or the Ethereum chain. Put that token address in here in this website. We'll simulate a buy and sell to see if it is possible for you to, if you were to buy those tokens, if you could sell them, right? Because a honeypot is where you can buy the token, i.e., you deposit your valuable crypto into the contract, and you get this shitcoin in return, and you're not allowed to sell it back in and get back your funds. So that was just that real quick. I just kind of wanted to talk about that. I might make a YouTube video about those in a little bit more detail. I might even collaborate with Alex. Alex is a little bit more of an expert on these things, but just constantly enjoy introducing new tools, things to you guys. So
sure, heads up on 2 new tools. Never heard of honeypot.is? ES? IS, I think it was.
Yeah, honeypot.is, yep.
And sorry, remind me, the first one was
TokenSniffer.com.
All right, TokenSniffer.com. All right, guys, excellent. Always something valuable to be gleaned, as always. Let's go ahead and get into this first set of requests. Also, we do have a D-Live chest I gotta deploy, so guys, get your lemons in now. I'm gonna open the D-Live chest in, say, 3 minutes. Yeah, get ready, 3 minutes. Let's introduce the next request, and then I'm gonna go prepare the D-Live chest. putting the first request up on the screen. Let's go ahead and get into it, guys. It's the following. Let's see here. It's coming from our boy Anyword of the live chat, requesting Mist, M-I-S-T. All right, giving Mist a look now.
All right, let's actually go over to Gecko. All right. So number 522 ranked by market capitalization. So you know, those are the coin I like to look for. I have had success with looking at things around the 400 to 600 range, and looking for those, kind of holding those for the midterm. Now, I'm not intimately familiar with Mist, but we're going to find out here a little bit. The capitalization of 83 million, relatively low 24-hour trading volume, and TVL locked of about 18 million. That's good to see. You definitely want to see TVL of over $10 million locked with kind of any project that you're engaging with. So we've been in a downtrend here for a while, but yet Mist. Let's see here. Go to, this is just the day. Doesn't surprise me that we're uptrending as Bitcoin is moving. So let's go look. We've got, all right, so here's the initial launch back in September. Pretty good run up, almost a full retracement back down to that previous level of support. So just on its face, doesn't look bad to me. About 40% down just in the last 3 days. Let's see here. Let's go to markets. Let's see where we're going to be charting this. Yeah, this is going to be primarily on Uniswap, 87% of its volume on Uniswap v2. So let's see if we can get this on TradingView. If not, we'll go over the chart next. Okay. Yeah, here we go. Yeah, we actually have that launch back in a little bit early. So the 18th of October, it looks like this actually. This all the way back to April. So yeah, let's go to ChartX. Grab the contract address. Here we go. Dex tools. Dun, 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 There we go. There we go. And here's the liquidity pool on Uniswap v2. You got it. Thanks, guys. Thanks for being patient with me. All right. Look at the 4-hour chart. All right. Yeah, okay. So just initially, the first thing that I see is this thing has put in some good performance. You know, I always feel a little I don't really care. It doesn't really matter how I feel. Let's just talk about some obvious things. Okay, so when Mist first began appreciating in price, it did establish resistance at this level, pretty much right where we're at right now, 69.86. That's current price, but that also works pretty well for this level that we're going to mark out here. We're going to mark this as support because I do believe that it is. You can see price climbs above it, retests, and then we have that parabolic rise. With that big spike in volume right there. Price comes down, retests it, does find support there for another pretty significant rally of 70%, and then trades underneath it and accumulates for quite a while where it finds that level as resistance, breaks back down, breaks above, and what do we find? It is support once again. Price has climbed following that initial push off, 132%. and now we've had a 55% retracement, 60% retracement back down to retest that level. Well, if history is anything as a guide, this seems to be a relatively important pivot point. All right, so you've got, again, got this level right here. Does seem to be the lowest level that we've been able to trade since the token launch. So if you're looking for exchanging those tokens for WETH back up in this range, then you're in the buy zone. You're at the very top of the buy zone. So an aggressive entry would come right now, just trading the chart pattern on the chart, not looking at any indicators. Whereas a more conservative entry would have you DCAing in down to 38. Let's see here. Now, with that in tow, with that being said, a triple bottom, large volume spike on that sell-off with an immediate reaction, and ability to break back down below. Yeah, just from a chart structure perspective, I mean, this is buy zone territory. Now, keep in mind that this is going to depend relatively heavily on, maybe not. I guess we'll find out on Ethereum and on Bitcoin. Should they find their support here, just in an area where coincidentally it seems like Mist is finding its support, then likely a rising tide is going to lift all boats. Yeah, I don't have too much. I'm not the expert at analyzing this information. It's not my thing. I just look at the charts, and I kind of like what I see here from Mist.
All right, well, that's a fair look at Mist for our boy Anyword in the D-Live chat. We also gave away some lemons in the meantime. Congrats to Anyword, actually, who also took the top lemon spot. There you have it, guys. We've drained the CC coffers of all their lemons at this point. It only took like 3 months. It took about 3 months, but we officially hit basically rock bottom of the lemon supply. With that said, let's go ahead and get into the next request. Maybe I'll read out the super chat first. We got a $20 USD super chat coming in from Bob the Builder on YouTube. Big shout out to my original and only mentor I've ever had, Justin Wise. Look forward to the day I get to tell you all the things I've accomplished in only the last couple of years. So proud to know you, man. Signed, Paul. All right. Very big thank you and $20 super chat coming from your boy Paul in the live chat.
Hey, thank you so much, my friend. You know, I think about you quite a bit, man. You're really inspiring, man. You know, your enthusiasm is infectious. I've loved having you around in our community and in our Discord. I've loved chatting with you and seeing you grow as a trader. So hats off to you, man. You put the work in. You put the work in. You deserve the accolades. I'm just the guy on the screen.
Well, you are very humble as always. But with that said, guys, let's go ahead and get into the next request. We have the following for GBU. Professor Wally came via that super chat earlier. He wants to look at time and KDA. All right. Well, let's give them a look. Let's start with time. Dollar sign time, you say.
All right, let's see here. Which one is it going to be? The Madagascar token?
It's Wonderland, I think, time. Yes, I think it's called Wonderland time on CoinGecko. It is a...
For 93, we got a blue chip. All right.
Oh, Avalanche-based token. Crazy.
A market cap of over $1 billion. Let's see here. Yep, we do have an Avalanche token. Wonderland.money, docs Wonderland. Let's see here. Let me just... We got a rebasing token. Interesting. All right, let's take a look. Yeah, you know, Avalanche is hot right now. Just like anything launching on Solana is hot right now. Let's see here. You know, regardless of where you got in on this, I mean, you've got a really nice ascending structure right here. However, we're not trending up anymore. We have sold off from the peaks. We do have some support that's been established here. Let's go see where I'm going to be charting this today. Interesting. really sure where I should even chart this.
That is a good question. Top trading pair appears to be on Gate.io.
Let's
Followed
see if
by,
we can.
I need that CoinTrader.pro for this one. See if it comes up on TradingView though.
We do have time BTC.
The Hotbit one there, I think. That Hotbit one could work.
Don't see
I think
Hotbit.
Where is it? No? Okay, I must be tripping. I thought I saw Hotbit. Must probably was Huobi. This one's a little obscure. Let me get the music back on. I see the playlist expired, guys. Bear with me 1 second. Get the music on, and let's check into the chat. Where do you guys chart your time token? Do let us know. In the meantime, we'll hear back from the requester.
Hey, you can't put a price on time, huh?
Right. GB Professor Wall, let me know, where do you chart time? In the meantime, let's go look at KDA, because Kadena or Kaderna or whatever it's called is one that's certainly easily found on TradingView.
Yeah, let's go over to KDA here real quick. I'll just note, going back to that chart that I did have on CoinGecko.
Mm-hmm.
Looking at its USD value. Let's see here. USD support is right here. Let's see here. This is its market capitalization. So I want to see price. There we go. Very similar. Honestly, looking at market cap can even help with these things too as well. But looking at price, we have this uptrend that seems to have been established, and we have recently broke that uptrend. We haven't formed any lower lows yet, but we have formed a lower high, and we see this relatively steep drop off. So I would be watching to see if price breaks below this price level at about 7,500, it seems, to the US dollar, and looking for that actual break of market structure, and then just kind of stepping aside until a trend resumes. Alternatively, if we put in a higher low here, if price stops right here, then we've kind of got the same situation that we've got on many cryptocurrencies, where Bitcoin and Ethereum seems to be holding Trader.pro, where we do seem to be holding time, new bank. We want Wonderland. Here we go. Wonderland to the dollar. All right. Thank you so much. Unfortunately, this doesn't really give us a whole lot. And this also seems to be in contrast really to what we're seeing over here. Because we just don't have a lot of the data that we had. So I'm going to actually prefer to stay on this chart right here. Let me make sure the one thing is, yeah, the prices do seem relatively good. This is like charting Bitcoin back in 2016, back in 2018 actually. Anyways. So again, I just want to point out that support around the $7,800 level, and we did just make a higher high in local market structure, but a lower high in medium-term market structure. So you can see that break right here, and we can see kind of a similar thing play out here and also here. So again, I don't want to be a bear in a bull market, but I also just want to note the fact that we have formed a higher low here. You are again in a dip buying opportunity zone, but if price breaks support here and starts trading below 7,500, I would look at that as a good opportunity to take profits and step aside until you see that trend resume. However, again, forming that higher low here is going to maintain that local market structure and see if we can actually get a break that all-time high of 10,000 actually.
All right, excuse me, let's go into KDA in that case, since we've given time a good shake. KDA should be definitely found easily on TradingView, so we'll get back into the old TradingView.
There you go. Done this. Thank you for that tip, Chili Lime. Really appreciate that.
Yeah, there was some good advice coming by way of Chili Lime in the Twitch chat. Big shout outs to you. With that said,
okay, boss.
KDA on. Let's see here.
Dina to the tether on the KuCoin. All right. The last time we looked at this was last Thursday. So that's going to be 1, 2, 3, 4, 5, 6, 7. Was that the 11th that we looked at this? Yeah. And what did I say? I think I said take profits, Professor Wally. Let's see here. Well, where profits had. Profits were had. That's a good sign. Okay, so let's take a couple things that just stand out to me about this chart. We can see Minx go pretty parabolic here above the overbought level, which is where we this is a really good one of the. There's two ways to take profits with Minx. There's aggressive, which is where the fast line crosses the slow line. So that would have actually had you take profits, had you get in here. Let's actually look, and we would have gotten in on Kadena. Well, Minx would have had you get in on Kadena all the way back here. And then profit taking all throughout the way, multiple continuations here, continuation trade here, right at the beginning of this trend, another continuation here, another continuation here, and then would have had you take some profits on this candle right here, and then back into the trade here, and profits here. Okay. So aggressive would have you take profits there. The other way to use it is the recovery from the overbought zone. So when Minx is above the overbought zone and then crosses back below, and that's going to be signaling right about now. Now, looking at where we're at in relation to the baseline, you're looking at a potential 50% correction if price decides to stall here. Look at all the volatility that's coming in right here. This is a relatively scary area of the market for me. If you look back, you don't really see a whole lot of that previously. So these are big candles with big volatility, lots of buying, lots of selling going on. Yeah, this is an area where I get concerned. And if the trend resumes, you're going to have the objective signal to step back into that trend. Again, I'm gonna hold pretty firm to my previous statement here and recommend profit taking. We can see momentum has died off as volatility has expanded. High volatility enters at the end of a trend when momentum dies down. High volatility comes in at the bottom of a trend when momentum dies down. And what do we see? A massive increase in volatility. Let's actually see if we can see that effectively. So look at ATR, which is a measure of volatility. Just continue to skyrocket here as price pretty much stays in a range here, right? See ATR increase slightly, of course, but then it just starts really shooting up here. And that is, again, volatility increases at the end of a trend and momentum decreases. Look at momentum completely falling off the map. Not falling off the map, but dying down, and volatility continuing to rise. Those are pretty telltale signs the end of a trend. So I would be taking profits here.
All right, good stuff. Well, that would be a two-packer request for our boy GBU Professor Wally. There's time and KDA for you. All right. Well, this is Thursday. It is the Justin Wise edition of the Kraken Crypto Market Update. So what do you say we go into a bit more overtime, knock out a couple more requests? Here's the next one. It's ETH1 on DLive. Can we look at Kusama? Thank you. Yeah, Kusama's had quite the pullback. Let's check in on KSM.
And I know because of KSM1. Yeah, and I know. Anybody? No? Okay. All right. So I quite like Kusama, actually. It's a good project. But when it comes to trading this bad boy, we've got a short on our hands all day long. I'm not actually sure if we can... Is Kusama on Binance margin? Let's find out. I'm pretty sure it is. It would be kind of silly. And I'm almost confident it's on Bybit. Let's see here. Markets. Volume, Binance, KSM USDT. Let's see. Perpetuals. Yeah, KSM USDT is on Binance Futures, so on Bybit Futures. So you can short this. And we are seeing a short all day long on this bad boy. We can see again here. I was just talking earlier about those profit taking signals. The sharpest one is when Minx goes above the overbought line and then comes back down below. And here we have it. Let's just go back and look at where we saw this in history. We have it right here. Recommending you take profits on this section of the wave. And you might look and see, oh, we missed out on a whole bunch, but really, did you? You would have had to hold through this. This is letting you take profits right here on this candle after getting in right about here, or even lower if you bought the dip. And although this looks fun, this looks like we went up a whole lot. Keep in mind that there's just this massive candle that pushes you up there. Almost any indicator is going to miss that. And then you have this massive correction. So this looks like a lot of pain. This is a dangerous area to be thirsty on. Whereas you have this nice 36% trade right here. You have ranging chop, Minx telling you to stay out, Wada telling you to stay out. Look, keeping you safe. Then you get your entry here. Nope, Wada's not with it. Wada gets with it here. You're able to get in on this portion of the trade before a pullback. And then you get in on this last movement. Okay, so we've got a Kusama short. Minx has crossed below the 0 line. Actually did so yesterday. And we do have that rising momentum from Wada Tar today. You also have that volume confirmation on that bar. Price is lower and volume was higher here. Volume is a little bit lower on this bar. And we're just at that boundary of the qualifying line. So Kusama looking like it wants to correct a little bit more here. And is printing targets of 309.01, 272, and 234. And now, if we just hit that 309, we just be coming back and retesting our current macro meso level of support. A little bit more, we'd be testing this shelf that we formed, and further down again, we're going to be retesting previous resistance as support. So we've got we have 2 levels that have already acted as support, and then down at the 234, we've got a level that has not yet been tested. But that's what I see for Kusama. Not maybe not a bad opportunity to scale in for the long run on this way down, but for those just looking to trade this puppy, I would be getting in that short.
All right, here we go. Now my mic is plugged in. All right, let's go ahead and get into the next request. What do you say? A couple more minutes still left in the show. Guys, let's do it. We got the following. In fact, 2 of the next questions relate to mana, so let's get Decentraland token up there. First one comes from Boris Bitcoin. Probably won't have the time, but can we look at mana? It's one of the few coins bucking the trend today. And Bflow writes, is mana USDT good for a continuation long? All right, so both thoughts are on Mana's performance and continuation longs.
Sure, let's take a look here. All right, so this looks like distribution to me. We do have this massive pump to the upside. Of course, Mana had this 157% daily candle right before Halloween, followed by a pretty large 20% correction. But you can't take those 20% corrections. You can't take those 150% gains. So we've got a pretty nice range here. So we'll just use the candle bodies here. We've got 360, and then down here we also have 234. That's a pretty wide range, right? It's a 50% range. It's even more. Obviously, things are longer to the. Things move up faster, things move down less. So the loss opportunity here is less than the potential gain if you can get in on this movement to the downside. But this looks like a selling area to me. We've come back up to retest that top of the range. But here's the thing. You got to watch this closely over the next day or so, or maybe even today. Because you're right, Mana is bucking the trend. And although our momentum oscillator is pegged, sometimes these things, when they get pegged, can continue to peg. Kind of call that the overextended strategy. I've talked about that before. Let's see here. So volume is still good. Volume is still higher, and price is still higher than it was 10 days ago. And it's same over here. Even here, price was still higher. So volume's still relatively positive on this. Wada Tar is still positive. Momentum's died down, and we actually could be getting a continuation signal here from Wada. Looking at Minx, Let's kind of zoom in and expand on that. We actually do have a continuation signal on Minx today. Now, again, WADA is not confirming this. Volume is confirming this, and we are above the baseline. So this does fit the bill for an aggressive entry. Just keep in mind we are at resistance. I would feel a lot more comfortable seeing this daily close above this level. Let's actually go down to the 4-hour and see if we can't see this with a little bit more clarity. Yeah, let's kind of zoom in on this. However, let me point something out here on the 4-hour chart. This is shaping up to be a potential breakout trade. Why do I say that? I've talked about this before. I'm going to do the exact same thing. I'm just going to come over here, make that exact same. I actually did like that. I'm just going to put the horizontal line back exactly where I had it because I think that was the right place to have it. Okay. What have I talked about with breakout trades that I like to see? I like to see a range be established. And then I like to see 1, almost 2, 3 tests of that level of resistance, followed by a pullback that is greater than 50% of the distance from the last low to up. So what I would want to see here is this is the last low that was put in the market. So what I would want to see here, we can use a fib retracement for this. Oh, here's the low. Here's the high that we put in. I want to see price stay right here is the 50% correction. All right, a 50% retracement of this movement from low to high. I want to see this level hold. Okay, and then on the next close above resistance, I'd take the trade. You can also be a little bit more conservative and say when we close above this high. So whether you're saying a close above 358 or a close above 386, either way, the only difference there is when you get in, not the actual direction. Note that we are respecting the 4-hour uptrend right here. And as long as we stay above that $3 level, Decentraland does actually look pretty good, even though it does look overextended. So a daily seems to be giving us signals that we're going to continue here, and the 4 hours respecting that trend might not happen. We might just continue to see price meander here, but things are starting to look good. The only thing that I'm a little concerned about here is this recent correction. We do have the rising momentum on the 4-hour time frame. We do have WADA agreeing with us. We do have volume agreeing with us. So this might actually be a fantastic entry. The lowest price that you might be able to get in for this next push. But again, if you want to be a little bit more conservative, then wait for that confirmation, because if we do have another red candle, then Minx is actually going to turn over here on the 4-hour time frame. So definitely one to watch. This looks like a potentially good trade.
All right, wonderful. Well, that would be Kusama. Maybe we can fit in one more. What are you saying, guys? Justin, are you down for one more?
All right, we'll do one last one.
Final one. I mean, hey, if you want to go, we go. But hey, that's actually, you know what? We knocked the majority of them out. How about that? Here's what remains. Just 2 on the board. Let me know if either of these looks interesting, although both look a little more on the obscure side. SAITAMA for Daniel N of the YouTube chat. Can you look at Saitana Inu, please? And there's also OVR. OVR for Zybernetics of the live chat. Any of those sound interesting to you? Either Saitama or OVR?
Let's look at, I'm just looking at Saitama Inu to the dollar here real quick.
Going, gone.
Right? This had a big uptrend here. Seems like it went up 1200%. So we're kind of catching the meme coin rally. Big, massive correction, large sell side volume here. Kind of looks like the sell side volume has been exhausted. And again, we've got a lot of buying pressure coming in here. So this actually doesn't look too bad. Don't want to see price break back down below that, what is that? Almost the 9th decimal, a 6. But this is something, toss a couple $100 in and try to get 1,000% of your money out of it. And it doesn't look too bad. I don't, this is so low cap and so meme coin TA is not the best method here.
Mm-hmm.
Well, that's not true. Like TA is a fantastic method. This lets you know, like, hey, should I have bought here? No. Should I have bought here? No. Should I have bought here? No. We've got this nice big volume spike and we've got this big retracement. But again, just don't put a lot of funds in bullshit like this, man. Just be careful. And we'll just look at that OVR real quick.
Let's do it.
VR to the dollar here. Let's see here. Again, just this big, massive run up. Seeing, this initial high, secondary high, pullback. All right, well, let's see. Listen, all I can say about this too is like, let's see if we can maintain. I don't really like that either, but see if we can maintain some kind of structure. I'd like to see price remain above this high of $1.73. These big volume spikes right here and the subsequent lack of volume on the secondary push is concerning. It does kind of indicate that buyers are getting a little exhausted here because they didn't come in and give this buying crescendo. The second push was significantly weak. Volume is still quite high, so there's lots of transacting going on here. Volatility seems like it's going to be real high. Look at these wicks that are coming in. These aren't the things that I like to trade because they're very unsafe and unstable. The higher the volatility, the more dangerous it is to trade. But again, I don't see any good levels. We just don't have a lot of price historicity here. Price did come down and retest previous resistance pretty much. So if you're looking for this range to hold, you're looking at that $1.72 range as kind of your best opportunity for a buy-in. To close below that level, I'd be waiting for some kind of volume spike. Again, going back to that Inu example, you can see that when we actually form a significant bottom, there is a big volume spike. But here we've got what looks to be a downtrend trying to assert itself. An alley-oop candle, a doji, and now we're back to a bearish engulfing. So this actually looks bearish to me.
All right, that's OVR for you. Big shout outs to Cybernetics of the YouTube live chat. There it is, guys. The Thursday installment in the cracking cryptocurrency market update. It's pretty much done with. Big shout out to Justin Wise holding it down for well over an hour. Quality TA and analysis done just this right way. With that said, guys, time to get out of here. We're gonna be back tomorrow. We're gonna wind the week down with the Friday installment. Jason's gonna be back for the Friday update. Not much more to add. I'm gonna quickly switch things out here. Gonna put Justin up on the main screen here. So, Captain, let's get to it. All right, Justin, you got the cam, and we're gonna go one things out. Final words to you, my man.
Well, thank you guys so much for joining us for another edition of the Kraken Cryptocurrency Show. It's been fantastic to be here with you guys. Thank you guys for all the comments, the likes, shout outs to GBU, Wally, and Paul for the super chats. Thank you, Jack, for doing a fantastic job as host. And just trade safely out there, guys. Again, just to reiterate what we talked about earlier, looking like a reversal baseline bounce opportunity for Bitcoin and Ethereum on the daily time frames, lower time frames looking exhausted as well for the sellers. But you got to watch this closely because there is some pretty significant sell side momentum that we've seen over the last week. And if we are able to close below these levels, then we are looking at more of a correction. And honestly, I'm still of the opinion that those are long-term buy opportunities. I'm kind of set on my Bitcoin $100,000 level from multiple perspectives as we went over. But again, trade the chart that's in front of you. We talked about a couple tools that you guys can use to protect yourselves with regards to these contract addresses and kind of these low cap projects out there. But overall, just have fun with it. There's a lot of opportunity out here. The market's frothy. And if you're smart and if you're intelligent, then you can capitalize on this. But just remember to preserve your wealth and be careful, guys.
Well said. Sage words of wisdom as always. That's the head honcho. Justin Wise signing off. Your boy Crypto Jack doing the same. Peace out, big guys. We'll be back tomorrow.